Everyone, welcome back to the Trailline channel. This is Richard and Ross, and today we're continuing on with our America's Greatest Opportunities series and talking about Hansens, also known as now Monster Energy, ticker symbol MNST, which had a fantastic run of 1,200% in just 79 weeks. So to start with, to kind of set the scene and put everything in context, Ross, if you could go down to the fundamentals here, this was growing like crazy. Earnings were up the previous 4 quarters before that first buy point on the chart here. Sales were also accelerating. Return on equity was 18.7%. And you can also see that the number of funds was growing the last 4 quarters. And also the overall product was pretty revolutionary, pretty new. And they were kind of focusing their advertising on the X Games, extreme sports area. And it was just growing like crazy. So with that, Ross, I'll hand it over to you, and let's talk over this weekly chart and then move on over to MarketSmith and also talk about CELH, which is kind of the today's Monster Energy, which has had a tremendous run and could be setting up for a second leg similar to what Monster Energy had after this base right here. So with that, Ross, I'll hand it over to you.
Also, we'll check out Monster Energy on the on its most recent chart as well. I think
Absolutely.
We were discussing that one. Who knows? We've been watching a lot of these stocks actually break out, change character, and really get going. So who knows? It's been slow for a while. We'll discuss that when we get there. And to be quite honest with you, I don't think there's, we're not going to spend too long on this one. But the first thing that stands out to me on this big liquid leader is what stands out to me on all of your biggest and best high quality model book stocks, and that is the way that it just holds its 10-week line. Sure, we've got a couple of shakes below that 10-week line, the red line that we're pointing at here. We see it gives you some very obvious add-on points, and if you're able to, now sure, we'll take a look at its daily chart, and there's always looking to the left and seeing what it respected more short-term on a daily basis, but this was one of those super liquid leaders where you could play it off its 50-day for quite a while. Bill would tell you, especially on a newer stock, after it breaks out, that first and second pullback to the 50 days are almost must plays in terms of risk reward. And I'm a big fan of doing it anyway, especially on a big liquid name, because let's say you buy it within, 0.5% of that average, it gives you room to let it wiggle below and not really lose more than 1% or so, which lets you play that game, several times until it works, especially if you're seeing big accumulation, whether you're, like we talk about the launch pad game, which probably happened down here. I would imagine the short-term moving average is curled up. And then here, when it's just riding up its 10-week line or whatever short-term moving averages it would tend to respect. So that being said, we've got the big breakout on volume, your classic textbook William O'Neill breakout. Now, let's point out this is back in 04. And the reason I point it out is I see a lot. I think now you can have, I think this is a temp. If you look, you don't see it. It looks very easy on the weekly. We got an inside week. It just should. Listen, this looks like a big failure. If you bought this and paid up, let's say you snuck in early here and a little more here and here. Let's say it was whatever day this thing shook down to here. If you had a big position, it's not going to be. It's not going to be fun. So this is one of these things that you can see once it got up around that actual buy point. It runs into a little resistance and yet pulls back again for another retest. And here's one of those. I love these situations, the confluence of, its prior pivot, its prior pivot, which also was a prior high, as well as its 10-week line. You've got a ton of, so that's a big significant support. It's one of these things where you can really step up and play the weakness and in some size on a liquid name and have minimal risk. So I'll just point that out there, and you've got the, respects it throughout the entire run. Obviously, this is all post-split, but you're looking at, let's call, I don't know if this is $4 or $5 in here, and before it even begins to build a new base and shake below its 50-day moving average, you've got more than a double in just a few months. And from there, you can see it really explodes again. So there's really not, much to be said. The add points are very obvious, whether they be on weakness off its 50-day or on strength through the very obvious shorter term pivots that we discussed, add-on buys. You finally get the break below the 50. Now, depending on where you bought it along the way and what kind of trader you are, you may decide you're not interested by the time this has got a couple of closes below its 50-day and decide to step away and not have quote unquote dead money, or you can sell partial position, let's say hold half your money. And depending on your size, there are some folks out there that are going to want to try and hold it for a year or more and, try and combine the tax game with the technicals. You're not going to buy and or sell only because of taxes. But hey, if you can, if it makes sense to, you're a larger institution or larger account and taxes are a big deal, that's, I know, a game that they'll sometimes play. But again, even if you toss the whole position and put your money in other stuff that was working at the time, I'll tell you, not a whole lot of stuff was probably working. If I remember correctly, the market is also going through a rough spot at this time. And you can see here, it gives you a clear, easy way back in. You could even draw a declining tops line here and sneak in before this pivot, which is still early. This is what we would consider, that's not necessarily, well, this is what we would consider a proper base breakout, double bottom, textbook breakout. And again, this thing just takes off and you're not lucky enough to have it touch its 50-day moving average until it almost doubles again.
Right.
So from there, it's that same thing. You get a wild shake under the 50-day. I'm going to tell you, this would probably have me out on that intraday on the day that this undercut that week, I'm not going to wait till, we'll look at the daily and see how that all went. But that week, if let's say it was still Friday and I'm not going to sit in that stock, I'm going to much prefer to buy it back through back above as it reclaims its 50-day moving average. Let's say this prior high and a declining tops line. If you were to draw it there, right, your odds of that working from that point, even if you have to pay up a few, 3 to 5% from where you originally got shaken out, it does wonders for your psyche, which, you've got to always manage along the way. Keep in mind, here's something you should do. I was actually talking to a friend who's been managing money as long as I have, and he said to me just 2 days ago, he goes, Ross, sometimes I look at my portfolio and I add up all the money I would lose if all my stocks hit, max stops. And he's like, the market has become significantly more volatile. It's a lot harder to sit on heavy volume. I have that is my, we've been discussing on Twitter, your one bad habit. My bad habit is too much volume at the wrong times and getting squeezed out of stuff and having but that being said, when you've got one of these stocks, that's just showing you these major leadership qualities and you get the immediate recovery and, that high risk reward with the confluence of 3 significant areas, you've got almost no excuse not to try and buy it back there, especially as it recovers right close to those areas, because again, it allows you to be instantly, you can keep that loss super tight and logical, which to me is the most important. There's nothing more important than that. I don't care how good I think a stock is. If I'm not at that sweet spot, what I call optimal entry, where I feel like I've definitely, because I have to have the conviction after you want to put on something meaningful. And so anyway, that's one of those conviction points where you can really
add on size.
Like Ray has been discussing, reverse pyramid, right? Maybe buy much more than you would normally buy early on, smaller up to as much, right? And then when the thing takes off, who knows how you want to do it? Maybe you buy even more and then sell some, there's all kinds of ways you can be fancy. I don't recommend being fancy. I think, sticking to the basic rules, you'd be surprised how well you can do just letting your stops work for you. But I think I've done enough blabbing, especially on this one. Richard, what am I missing? What can you add for us, please?
Sure. So Ross already mentioned in this part that during this section, this base, that the market was going through some trouble, but also during this initial base, the market was just coming off a bear market. This was showing some relative strength, forming some higher lows as the market was coming up the right-hand side, and was just acting generally like a leader should, being right near all-time highs, right when the market is making that turn and starting a new uptrend. And if you're able to catch those leaders and identify them early, that's when you can catch a super nice move and get a cushion very early. Yeah, just ride this for as long as it holds that 10-week. I do want to ask you, Ross, about this climax top, and how you would interpret that, because it does look like the widest weekly range going back within the stock's run.
There you go. So, I'm always looking for that to be, so from that perspective, once you're up that part. So as far as Climax Run goes, there's a lot. So I did enough workshops with Bill. People would often ask that question. And I'm going to tell you 90% of the time, the reason why something wasn't a Climax Run when people would ask were the one big reason was it was just too early. So it's got to be a minimum of 18 weeks after that breakout. But, an actual, you're not just looking for climactic action, because that could happen and then it can base build and it could go again. You're looking for the top of the stock. Right. In the definition of what he's selling as a climax top. He doesn't mean the top for now. He means this is the top, get out of the way. It may be a very long time before the stock bounces it, if it ever, comes back again whatsoever. And that's because it's a stock that's had that, let's say that, and it could be a parabolic type move over just 18 weeks. But if it's just broken out of an early stage base and it's only, let's say 18 or 20 weeks out, the likelihood of that being the ultimate top in the stock, I'm not going to say is slim, but that's not what, that is not the action that Bill is talking about. He wants to, he's talking about a stock that's broken out like that, base built, ran again, and then after it's up 3, 4, 5 times, does one of the, stands up straight in the air, exhaustion gaps, maybe 5, like 6 out of, correct. So, and if you look, that'll be like 5 to 6, 7 days up, and with the big exhaustion gaps, like you said, widest weekly spread. You close well off the highs there, and again, we've discussed
on
this
the daily chart too. What it looked like.
Yeah, so this is a tough one for me. I'm not going to lie. I would be buying this back right here. I don't really mind the action, and at the end of the day, whether you sold this climax in here and this, you're very lucky here. I'm typically one to let the 50-day or that 10-week line be my guide, and here's why. So that's, there's no right or wrong way to do it. You could sell the whole thing. And if you're Bill O'Neill, you sell the entire position here and you don't get sucked back in there. Like I might try, like, oh my goodness, it's going to go on another run without me. And let's say I sold it all, I'll risk accordingly, using that line. But I also try and keep in mind. So hopefully you would at least recognize you've got climax type action there after a stock that's gone up. What did we say? 1,400% in about a year and small change.
Right.
So when you're looking at a late stage base in a stock, that's starting to wobble around its 50-day, and you can look back and see that, you've got actual climax action according, to the textbook definition. Never a bad idea to put some money in the bank when you're up 10 to 1,500 per, 10 to 15 times on your money.
Absolutely. And I'll just add, if we count kind of the bases, this is about number 1. This is a pretty stubby base, 2, 3, and then these together right here and make about 4. So this would be about a 5th stage base, just eyeballing it. And also looking at the volume within the base, it looks there's none of that kind of dry up in volume like we see in this, the last kind of proper base down here, or even the start one. So there's a little bit more churning action if you look at the volume. So I think I just point that out.
Oh, absolutely. Absolutely. I get sucked in by, so this one, and you're right, this one didn't close, this big bar didn't close enough all flows, but you ultimately hold that 50-day. Right. Yeah. So I'm just saying this is a little tricky. I'm not, I've been sucked into quite a few back in around the highs as a stock is forming its late stage base, and I'll chop myself up a little bit. It's I've been lucky enough to sell some on a top day, not at the highs, and I've probably chopped myself up on way more than I've, sold close to the high and then just walked away, left it alone. Right. So.
Perfect. So let's go ahead and let's take a look at a few of these breakouts in the Climax Run in MarketSmith, and then also cover CELH. All right, so here we are now in MarketSmith, taking a look at July of 2005. That's the later portion of this chart. This is the initial cup breakout. The first buy point is just around here as a move moves through the 30 mark. Here is the retest we were talking about right at the 10-week. And this is not an easy hold. You can see some very erratic behavior, but it does hold that 50-day pretty much during this entire run. And then this, I think, is a secondary buy point. Looks like a nice earnings breakout on the highest volume, at least, pretty much on this screen until this kind of whippy action here. And the reason I think this is so choppy is because the market is not in just a clean uptrend. This is where we are coming off a bear market. This breaks out pretty much right at the start of the uptrend in the market, but you can see that this stock continues to go up as the market is making lower highs and lower lows. And that's why it's just so whippy in here. So this is kind of screaming strength even before the second stage base. So now let's move on to that second stage base. Or Ross, anything to add on that first buy point?
No, you've got that under control. Like we said, it's always good to see, looking back to 2004, that everyone likes to say, oh, it's so difficult now. Trust me, there's plenty of it, and it looks much easier and smoother on the weekly. But I think it's very important to point out the kind of action that you can actually wind up having the stomach while you obey your rules. And that's another one too. It's very tough to be able to sit right with a concentrated position that does this in 2 days after it takes a couple of weeks, and you're feeling pretty good about that run up. And you right here, trust me, you don't want to wait. Your brain is telling you, I'm not waiting for that to break the 50. I'm already ready to throw up, right? And you sell it and it never even touches the 50-day. And then you wind up buying it back here and you get all shaken around and your brain is just toast by the time you have any chance of, so again, that being patient, following your rules, letting the stops work for you, and staying positive is super important. So, and you can notice, even if you do get all beat up, if you don't let your head get out of control, even on, I'm going to assume this is an earnings gap right here, you could have bought it back again, and it never ever goes back below again, that pivot area ever. So
perfect. Let's move on to the next base. All right, so here we are moving forward. This is the kind of double bottom base here. We've got a nice undercut of that low. And then as you move up the right-hand side, there's definitely some spots to get in before this true breakout through 13.5. We've got a pivot here at 12.08, as well as a consolidation pivot right here. I'm sorry it's so squished, but you kind of get the idea. You could definitely work your way in up the right side of that base. And even if you don't get in early, we've got a clean gap up on above average volume. You can see that with this spike right here. And then it goes nice and quiet on pretty low volume, and then we get another burst upwards, maybe on earnings. And then, as we saw from the weekly chart, a super powerful move, basically trending above the 10-day moving average right here. And then it forms a little bit of a short consolidation. You can work your way in, and a little bit of an add spot here after a nice decrease, and then an explosion of volume. And then we do pull back, unfortunately, below the 50 and form another little bit of a consolidation before a super powerful run, once again holding that 10-day pretty much up until the climax run with some nice exhaustion gaps. So Ross, talk to me about these exhaustion gaps, the climax top, as well as the late stage base here.
Right. So if we remember, we're on the weekly, this is where it did that. It had its widest weekly spread and then closed well off its highs, right? Middle of the range. And remember, like I said, it went on to build a base that may have fooled me back into it. And looking at the daily, again, I could see myself getting sucked back into the base, but that's neither here nor there. That's because, I would say this, like I said, Bill O'Neill would never do it. He would have all the confidence in the world that this was a climax. This would be off his screen. He'd be on to something else because he's already written it off in terms of risk reward. He doesn't even care. And I should know this too, because when the market topped in 2000, after it topped a lot of the stocks, the late stage base failures actually broke out and ran a little like this one, some more, and then they broke down and failed. So, it's just something to keep in mind, but I like to let you know that sometimes I get, I guess it's the FOMO, right? That maybe this is the leader that's going to run another 17 bases. And, like I said, I'll wind up getting chopped up and ultimately forced out, because we know on the weekly, it eventually starts to live under that 10-week line. Anyway, But yes, this Climax, so this is your classic Climax, widest weekly spread. So, you're up 10 times from the original breakout, way past, there's no way we're too early in the move here. And it's already after we've had an explosive move. Even from this base, you're looking at almost a double
Right.
into into that move. And that doubles after moving from, that's almost a five-fold move into this base, if I'm not mistaken, right? I think
Right.
the original base starts at around $5 pre-split. So here, you're looking at another double after being already up 5 times. So when you've got that climax action, late stage base, if you can catch it and have the confidence to stay away when it does, builds a structure that you think looks great and the earnings are likely still to look good, which is, anyway, I don't want to go on and on. So that is what I would tell you. That is the classic Climax top. The idea is to have the confidence in it, understand that this is a risk reward game. And even if this did work out here, you're still better off finding something else that,
Earlier
meets your criteria. Because at the end of the day, it all comes down to managing risk. You're wasting your time. You got to wait. At this point now, it's got to really force you back in. So
absolutely. And let's jump forward maybe a month or so to see the nasty drop it had as well after starting to live below that 50-day. I don't know how far we have to go forward, but this stuff does have a pretty significant drop. Go. Yeah. And it tries, but it does kind of leak below it. And then the largest volume in quite a while on that gap down. So this is a clear sell signal. Absolutely. And also I want to point out that all the key moving averages are now kind of pointed downwards at this point. And this tightness might suck a lot of people in. It looks constructive on low volume, but then it just breaks expectations and cuts below that. So that I think would be when it would be off my radar, but and hopefully avoid this nastiness. Ross, anything to add?
Yeah, I would just say, another clue is you can see here it's a stock that, when it's moving is respecting its 10 and 21 day moving average, and it starts to struggle with its short-term moving averages in a big way here. You got your big outside day. So by the time you're breaking your 50 and you're 10 times up in the move, there's no reason to wait around at this point. You're much better off being wrong, getting shaken out and letting it force you back in. So there, if you're paying close attention, there's clues right here that it's something not, it's doing something different. Also, again, as you've mentioned, this is not a logarithmic chart, but this base, even though this is arithmetic, you can see this is way too far back in time. And after the move from 12 to 50, it's not fair, but you can see it's getting super wide and loose in this area. On a relative basis. So.
Perfect. So now Monster looks like it's actually shaping up. It's formed a kind of longer term base, and we'll also take a look at CELH, which is kind of the young stock in this group. So let's take a look at the current action in Monster and then move on to CELH.
Here's Monster currently. We're looking at a current base on base. Here we've got, as you can see, pattern recognition from MarketSmith. We've actually, let me back that up. We're looking at a base on base on base. You can see the bottom of this double bottom not only undercuts over here. If you would have called this a double bottom and handle in this, this base area, you're undercutting here too, which is the reason I point that out. That's Bill would point it out. And it's one of those things in a prior area. So not only are you getting, your textbook undercut here, it's also worth noting that you get an undercut of that. Let's say you can go back and say, oh, that way you got the fail here. It's a little wedgy. So maybe you should have known it wasn't ready. And, Bill would tell you details. If you picked up on all the details, you would have known, so on and so forth. Regardless, we've now got base on base on base. If you want to, if you read the books, that basically counts as one structure. For me, it's, this is building power here. These are all, legitimate, double bottom. We've got a flat base here. You can see we tried. Now this is, we get a lot of this action around earnings time. So we've got earnings. It gaps up from underneath its 50-day and tries to break out to new highs. We know just from the studies that Bill O'Neill has done that in general, if you try and, that straight up off the bottom move, especially to a breakout, is much more failure prone than if we had built up the right side, possibly had a little consolidation underneath that high. So this is, technically this is no longer a flat base, right? Because we've made a new high here. And technically, you could say we're starting to build a new base, but this is not unusual action. We've got a breakout attempt. It was super quick off the bottom. So the fact that we're pulling back, doing a little retest of this area, a breakout back through 99.24, may actually get this thing up and running, right? Because we've been base building for quite a while. And not to go on and on and on, but here just to go a little more, much more long-term, look at monthly, we can see going all the way out. You just, we've got super tight action here. You never know, this group is on fire. We might get a little bit of a personality change or not. So it's a breakout worth buying. And hey, if you've got the personality change, that's the stock telling you, hey, add to me. If it continues to just lollygag around and doesn't really do what we're hoping for, maybe you take small profits, walk away, that sort of thing. But it's definitely on my watch list, along with the Celsius, like you were talking about, which is the newest, latest, and greatest fizzy energy drink, which apparently is good for you and helps you lose weight, if I'm not correct, or if I'm not mistaken, right?
Yeah,
Helps you.
absolutely. Yeah, I'm not sure, but can you go back to a daily chart for just a
Yeah,
second?
absolutely. So that, there's a lot, you got a lot of sideways and a big potential here. If it, this quote unquote failure is not that big of a deal to me, especially if you were to blast out of here on huge volume again.
For sure. And looking at the earnings, quarterly numbers, the estimates, there is some growth there. It's not that super substantial growth, but it is there. And we've also got the confluence of the little 100 Livermore level. So maybe it pushes through that. Finally, it can go on a nice run. Ross, let's move on to CELH, which is kind of the younger name in this group. And this is currently ranked number 19 out of 197. So this is a leading group at this point. That's important. And this one has those more explosive numbers, over 100% earnings growth, sales growth also strong as well. And looking at the estimates, 140% estimate revisions are up. And this is also forming a base on base structure, which Ross, you said you like to see. It had recent earnings, not the best reaction so far, but it's holding above that 50-day so far on a closing basis after a pretty strong run in 2020. So maybe it's forming up the power to continue on with this move. And maybe you can see it ending like with Monster back in 2004, 2005. So Ross, what do you think about this chart?
Yeah, I mean, let's just move back to a weekly really quickly, and I think get a more zoomed out view. So we've got this huge base. We break off the bottom. So here we're calling this, and third stage base, and fair enough. This is a tough one for me. So I mean, I would say this base on base, everything that I see here is looking fairly constructive. I've got my eye on it. I've had it on the top 10 list, especially because the group has been so fantastic. And I've watched these sugar drinks in many cases run and run and run. Right. Maybe Celsius is different. So even though I would say this, keep in mind that, we are a little bit late stage here. The move started at call it $7. We're up over 10 times. We're, third stage base. However, we do have fairly constructive action here. So as long as you're managing risk, the group, stays hot. And, I don't want to get into, some people might, it's the outdoor drink and the, the reopening play and all that sort of thing. Maybe you could, maybe that plays into it. I really don't know. But, that it's worth keep. So when I see base number 3, I will start to keep in mind it's getting a little long in the tooth here, right? We're up over 10 times. Right. However, I also know, you've got the super solid, like you said, the earnings are a little slow. We're not looking for spectacular growth, but as the market's been, and a stock like this, big institutions will put a premium on A, the liquidity, and B, the earnings stability. So right. That's where, that's really all I'd have to add. So I like the way it's looking. It's worth the risk reward from my perspective. The problem is it's a little bit later stage. You want to keep it in mind as all and manage risk accordingly.
Absolutely. And can you go back to a daily chart and
sure.
Also open the fund sponsorship tab? Because even though it has had a nice run, it's still kind of in that market capitalization range that I like to see. It's about 5 billion at this moment. and we see a nice increase in the number of funds and one high quality fund. So still looks decent from that perspective. This gap down within the base gives me a little bit of pause, um, especially on pretty high volume. But we also have this high volume close that, even though it's a red bar, this is actually support because of that strong closing range. You can see how it acted like that later on in the base. So yeah, we'll see if CELH sets back up again and breaks through around 80 and takes out the 83 high, which is the pivot of this flat base at the moment. So with that, thanks so much for watching. If you enjoyed, go ahead and leave a like down below and subscribe if you haven't already to the Traderline channel. And we'll see you guys in future videos. Thanks.